All right, folks, welcome back. This is the daily log entry for February 4th, 2021. I've included a very brief tutorial video on how I use the annotations on TradingView. I had a bunch of people from the new group reach out to us, so I'm going to try to do it as simply as I possibly can without making a big to-do, because it's really not a lot of big deal, but there are some that are not familiar with the platform, so it's been included at the end. All right, so here's the euro dollar for February 4th, 2021. Pause the video if you're not ready. All right, so we have midnight New York time, premium high, discount low of the fair value gap on the daily. Line open kill zone, just really lethargic overnight. Trading softer, had a small little optimal trade entry in here ahead of London. Then we have a little bit of displacement, but it's sloppy in here, but it ends up pumping it up into the bearish order block. We see that sends the price lower. And then inside of this swing high and this swing low, which is the lowest of all these lows here, this high to this low, you get an optimal trade entry. It goes above 50 into a premium. Again, relative to this high and this low, you can do this on your own chart. Hits an order block, which is also inside of a fair value gap right here. And it also is optimal trade entry, as I mentioned. So the market has displacement to the downside, creates a small little fair value gap in here. Institutional order flow entry drill outside of New York Open. Sells off. One more time, small little optimal trade entry in here as well with bearish order block. Sells off one more time. Retraces back to the fair value gap here. Small little optimal trade entry. You can see this on a 1 minute chart, and then sells off one more time, attacking the sell side liquidity. Again, outside the scope of the typical London close time frame. So while we did get some movement lower and a higher dollar, it's just not a really clean day. There are setups in here clearly, but it's something that I think that if you draw the comparisons between this day and the days before and earlier in the week, euro was a lot cleaner, whereas this is a little muddy. So we're going to go to cable now. All right, so here's the British pound for February 4th, 2021. If you're not ready, pause your video. All right, folks, this is the 5 minute chart on the British pound for February 4th, 2021. I mentioned that we would see pretty significant volatility today in the New York session for GBP, and it delivered. The market trades down into a fair value gap, and I'll leave this for you to study on your own. It's kind of a tricky one, but you can find it if you go through your time frames. But I'll talk about it when we do our weekend review. But nonetheless, the market trades below an old low, which is this red line in here. We have a buy side liquidity pool right here. After midnight New York, small little Judas swing. Trades up, clears buy side liquidity. Also, it's an optimal trade entry there as well. Starts to drift lower. Runs it back up into mitigation, which is in the form of a breaker. High, low, higher high, down close candle. Trades up into it here as well. And it's also the big figure. Now I'm going to teach you a little bit more about this low here that forms, but I'm going to wait until this weekend. But I'll show you a lot of things that happened to point to this very low, and its conditions and protocols that we follow, and I've taught already in the mentorship multiple times. So the market trades right at the beginning of New York Open, which is 7 a.m. Drives down into the fair value gap. That's, again, it doesn't look like a fair value gap. If you quickly look at it, it just looks like a big thick black line. It's not. It's two separate lines. The market runs from that, creates a buy-side imbalance, sell-side inefficiency, attacks the buy-side liquidity here, bullish order block, trades back down with fair value gap. It's too tight in there for me to annotate that, so that's why I'm doing it this way. Then the market runs, consolidates, runs another level of buy-side liquidity, which is further back. And again, if you look at this price, look at your 15 and 1 hour chart, and you'll see that price is an old high. And the market trades up to another fair value gap. And again, I'll show you that one as well in the weekend edition commentary. And then afterwards, London close, time of day. We don't see the high form there. It's a little early. If we consider the non-farm payroll week and take that out of the equation and say it's not non-farm payroll Friday coming up tomorrow, the idea of the weekly range being capped would be right in here. This would, like, for instance, this would be a very strong contender for me, thinking that the weekly range for British pound is done with this, not going any higher than that. All right. But because it's non-farm payroll, all bets are off, and it's going to be a circus ride like it always is. So short, sweet, not much to speak of, but I want to go over to now TradingView and do a very brief tutorial on what it is I do and how I pull the tools from their platform to annotate the charts. All right, so we are looking at the Australian dollar, and I'm going to show you what I usually grab. It's the rectangle tool, and I try to find 2 o'clock in the morning during the time axis at the bottom of the chart, and I drag it over to 5 a.m. and notice that the time is set to UTC 5. Okay, and the way I add the annotation in the middle for the London Open kill zone, just simply type that in, and I'm clicking for the inside and center, and it appears just like you see all my other charts. Then I grab another rectangle, I go to 7 a.m., draw that out to 9, make it large enough so that way I know the text will be permitted to be posted inside the rectangle. Otherwise, if it's too small or short, the text won't appear, even though you may have the annotation set up like this is. And again, I'm just showing you, pantomiming what you would have on yours to make it look like mine. I got a lot of requests whether or not these were actual indicators, and no, like I said, I prefer the high touch over high tech. And some of you probably would not like to do this, but I like it because it's something I'm used to doing. And finally, London close. Again, making sure you see the settings. Okay, so that's the kill zones. And now, if I'm going to see something in the chart that I want to make an annotation, a PD array, something that I'm going to be illustrating in our teachings, I use the trend line tool 90% of the time. And this was taught to me by a few of my students. And forgive me, I don't recall who you are right now, because there's about 24 of you that came back and gave me a tip on this. As you drag your trend line across the chart, it's going to jump all around if you have the magnet thing right here. Okay, if that's toggle, which is what mine is all the time, it's going to jump to the nearest high or low or open or close. So to keep it from jumping around and making it not level, you hold down the shift button. As you drag it across, it'll make your trend line straight. So I'm very appreciative of the students in here that are more versed in TradingView than I am. I'm still a noob with it. Now, there are times when I'm going to use a fair value gap illustration with a rectangle. Usually you see it in small little trend line segments, but if it's an area where it's already consolidated or congested, not consolidated, If it's an area where it's congested and it has a lot of segments with the trend line tool already, then I'll elect to use the rectangle tool. And all I'm doing is dragging it from one low to one high and then pulling it across the chart. And sometimes I'll annotate it with the descriptive label above. In this case, I want it to appear above the upper right corner. So the way that I do that, put the annotation FVG on top right. I like to keep the fonts at 10 unless it's inside the kill zone, then it's 12. Okay, and sometimes I'll elect to use the rectangle tool and show the fair value gap label inside the rectangle. And when I do that, all I'm doing is showing it the text alignment inside and center. And I said I would mention this as well. I got questioned how I did the vertical annotation. You start with a trend line and you find an area like a SIBI or a fair value gap. If you want to use it on a fair value gap, it's just as well. Draw a little trend line over there. And there may be a better way of doing it. Okay, I'm not saying this is the only way or it's the best way. It's just this is what I did. So I typed in, for instance, SIBI, sell side imbalance, buy side inefficiency. On bottom and center, you can see it's to the right of the trend line, but now I don't want to see the trend line, so I'm just going to take away the ability to see it by using the opacity. And now the text is there, but the trend line isn't. And there you go. Hope you find this insightful. Until next time, wish good luck and good trading.